Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some cryptocurrency theses because this is Crypto Corner Stat Stacker for Saturday, May 31st. Going to be going over some levels that were hit, some dip buys were filled over the past week, but some were not, so did want to go over that. But before I do get into basically my thesis, this is acting as, effectively my trading journal for the year of 2025 with crypto. Before getting into that, I did want to go over some things over here, including my thesis, and that is effectively based on this chart, which was included in a video that I put out on April 20th entitled Happy ETHster, and I went over this thesis that Ethereum could be hitting or may have hit at that time the cycle low of around $1,400, which just behind Ed, if I ask him to get out of the way there, you can see that corresponds with the all-time highs from 2017, right at the end of the year. So I was thinking, hey, maybe that could be acting as support, and that does seem to have some confluence with this other trend line corresponding with the lows from 2022 and the pivot high from 2019. We can also see this yellow uptrend here corresponding with the pivot lows over here from 2020 and 2022. And we did get kind of a fake out break below that. The price of Ethereum is much higher now. So yeah, that is basically my thesis. Oh, and that this red line here corresponding with that high from 2017, intersecting with the highs from 2021, that would put a price target by the end of 2026, which is right here. You can't see it right behind me, but that will put the price target up here around $8,000. So I think that there's a lot of upside potential for Ethereum. And then I did just include some fun notes here, some memes. Also did include this text I had sent to a friend on April 7th about buying the dip. And that did in fact happen to be the dip that we saw for Ethereum and across a number of cryptocurrencies and stock market, whatnot. And then I do have these memes up here that just kind of tell me that everybody is really bearish on ETH. That actually makes me bullish. And I did add a new one up here. I think I saw this last Saturday, which I believe would be May 24th. This is the trash icon over time. It's like these recycle bins. And then in 2025, it's ETH. And so that makes me really bullish that everybody is just shitting on ETH. And I think that because it has not outperformed, I think that it has the best potential to outperform moving forward. And so that's kind of what this thesis is based around. But then if I do go up here to the points, I'm just going to walk you through this, and then I will get over to the table of, the tickers and go over some of the charts. But so my thesis is based on, number one point, that Bitcoin and crypto will top between May and December of 2025, corresponding with a 4-year cycle blow-off top. And so we are now at the end of May. We have hit new all-time highs, but I don't think we have seen that blow-off top. We have not seen that peak euphoria, in my opinion. So I do think there is more upside to go. And so thinking about that, one thing that I do have, I think it's nice to have, is a savings account where I earn less than 4% APY on that savings, and it's actually about 3.6% via Ally Bank. There is a link in the description of this video if you would like to create an account, get some of that APY, which stands for annual percentage yield, but no pressure there. If you do create an account, I think we both get a little bit for it, but no big deal, no pressure there. Then this third point is that I also do have some debt, but that debt that I have is 0% APR, which is annual percentage rate, which that 0% APR goes up sometime in March of next year, I believe, which I could extend to August and, probably later by opening up a new 0% APR card. And so the thing about that debt that I have is I have over 100% of it stored in savings to be collecting on that APY. And so it's just like, the cash that I don't have because I've spent it, get into 0% APR in that debt so I can have the cash and then earn some sub 4% APY on that. Just, because I think that's kind of a safe strategy. But generally, going beyond that debt, I think I can do better with crypto. And so that is kind of what Crypto Corner Sat Stacker is all about. And so the remainder of that savings, going beyond the debt, my actual savings, my goal is to have 6 months of bills plus expenses in 2026. So, I can just have 6 months reserves set aside. Currently, I have less than that. So what I am trying to do, taking that remainder, that savings, putting it into crypto to get greater than 4% APY, and that is by effectively or approximately dollar cost averaging or DCAing about $500 a week. You will see that I do put more than $500 a week into crypto, but that is something that I can manage. This is something that, it's calculated. So I am managing risk there, and I am also keeping my debt covered there with that savings. And so the overall goal of this is to no longer have FOMO. I have in the past bought tops. I think that Ethereum, Bitcoin will be topping later this year, not just yet, but later this year. And I don't want to be FOMOing in then at the top. So that's why I am dollar cost averaging. It's pretty boring, but it is nice to be able to, without emotion, accumulate some nicely sized positions in Bitcoin, Ethereum, and some other alts that I could then sell at the end of the year, or maybe not at the end of the year, but at some time during the year if I feel like we're at peak euphoria, which I don't think we're at yet. And then this ninth point here is that I do have more confidence in Bitcoin than alts, just to name a few: Ethereum, Solana, and Doge. And the reason for that is, while I just made the case that I think Ethereum could be going up a lot, maybe to $8,000 by the end of the year, that's a really nice return. So I do think that some of these alts may have greater upside potential in the shorter term by the end of the year. But I think long term, I think Bitcoin will be more resilient. So in that sense, if I am to be wrong with my thesis here, I would have more confidence holding Bitcoin long term than any other alts. So I think that's an important point to make. Even though could get more upside with these, Bitcoin is probably going to be a lot safer. So yeah, that is kind of my thesis there. And so now I am going to switch over to this table for May 31st. In last week's video, I did populate the market cap divided by $1 million and added the price from yesterday's close determined by Grok. I tried it a few times this morning. There were a lot of gaps. The numbers over here representing my percent PNL were very far off. Last week, I found that Grok made a number of mistakes. So I'm sorry, I am not going to be using Grok anymore for that. It was a nice little experiment. Maybe Grok will be better at doing that in the future. But I'd rather not just be correcting Grok here. So I will be populating the market cap and the price data here, and then we can see what my P&L is relative to the averages that I have. And then, we can see what my plan is for the upcoming week with the daily dollar cost averaging. And so generally over the past week, and really with all weeks, I have been doing a $40 DCA with Bitcoin. And because that adds up to more than $250 a week. And then I've been doing about $36.25, which based on the little reduction that I get from Robinhood, it's about $36 a day. And that adds up to about $250 per week. And so my plan is to, sell ETH, ideally at the very tippy top, but I'm sure I'll miss it by a little bit. And then to hold on to all of that Bitcoin. But if not, and I do need to sell to get that 6 months of bills and whatnot, then I do have a little bit extra each day in Bitcoin that would, just be my stacking effectively for retirement. And then moving down the list, I did a number of $1 daily dollar cost averages because for a lot of these tickers, I am in the red. I was considering buying the dip on Ondo, putting $100 in there, but I did not end up doing that. I might end up doing that this week though, because we have seen quite a nice pullback. And I was also considering something with RLC, but I will go over that when I go over the tickers individually. But before I get into that, I should note that all of these tickers, I do purchase via these exchanges. And there are links in the description if you would like to create an account with them. I believe we both get a little bit of a benefit if you use my link. But I do move, basically all of these are the majority of my holdings off the exchange into storage using a Trezor hardware wallet. And I actually have two of them. I have a Trezor Model 1, which has been great, but it does not store or it cannot hold Solana, XRP, or Cardano. So I decided to get a Trezor Safe 3. And so I use both of those. I can't compare them to other companies, other hardware wallets, but so far for me, they've been great. So I've just got the link there if you're curious about getting a hardware wallet. But yeah, for this, I'm just going to bring Ed back and we can go through the list, first populating the market cap and then, putting the price over here. So let's look at Bitcoin's market cap that we will check out over here from coinmarketcap.com. And Bitcoin, of course, is the #1 highest market cap coin. And we can see it is over $2 billion. And I'm just going to copy it like this. It tends to transfer a little bit better. And then I will put that number here and then divide that by 1 million there. And so it looks like, I'm sure you're not surprised, that the market cap of Bitcoin has gone down over the past week. And so now let's populate that price by checking out the Bitcoin chart over here. And let's see, I'm just going to remove that. And so just looking at the close from May 30th, that was a price of 104.3326. So 104.3326, and we can see from that I'm up about 22% on my Bitcoin position. So I will be doing, continuing as always, the $40 DCA. But there's one thing that I didn't do last week, or I didn't note up here apparently, is I did a $20 dip buy. And if I look back at my notes, which I do have in front of me, or just out of memory, I did talk about a dip buy at $105,000. And so that did end up getting filled. And so what I might note here is, let's see, there's that $40. And then I am just going to do a plus, a $20. Ooh, got to do it with the asterisk there. Asterisk, that's such a funny word. So right there. So a $20 dip buy level. So let's look at the chart and see where there might be another dip buy level, or maybe I just want to do, another one at 105. But what we can see is I do have this green line here. It looks like that's at exactly $104,000. And so far today, for the 31st, Bitcoin has hit a low of around $103,110, just above 103,000. And what we do have over here from the past is these wicks here, and the highest wick that came down was from May 19th. And that low, the highest low, I should say, was about 102, 105. And so if we do consider that, maybe, 102 is a good dip buy level. I'm not sure. Maybe I want to do a Fibonacci retracement to get a sense of that. And we can see, this green line here at 104, somewhat arbitrary, really just corresponding with the top, the wick high from December 5th, which was at 104. So right there, we did pierce it, we did go lower, and thinking that, if we go down to 104, maybe that order doesn't get filled. So that's why I placed the order at 105. But yeah, maybe we sweep a little bit lower, take out the lows here, get people to go full on bearish, and then we see a rip your face off rally to the upside. So I could potentially see that. And with that being said, since we have effectively done this little doodle that I was talking about, we didn't go as low as I expected before the bounce, but we did get a bounce to the upside, getting rejected from that orange uptrend, which is, right around, let's see, that high on May 27th was at a price of around 110,000, just shy of 111,000 before getting rejected and pulling back. So I might erase that doodle. Maybe I'll add up another one to suggest where I think price could be going. But really what I want to do is just a Fibonacci retracement I just want to make sure that the volume is not getting in the way of the levels here. But so what I want to do is just a Fibonacci retracement from the low here to the high to get an idea of where this could be pulling back to the downside. So just the approximate low there, the approximate high over here. And so that's suggesting about $93,000 would be the 50% retracement. But maybe we don't go down that low, or maybe we don't go down that low over the course of the next week. So what might be good for me to do is add, let's see, the 382, which is around 97, 98, maybe that would get filled because that's $97.7 thousand. Let's also check out that 236. That's right around where we're currently at, right around 103. So, I must say that 103, we've already hit that level, so I would like to see it, if I'm going to be placing a dip buy order, I want to be taking advantage of the dip, not just buying some today. So I'm going to remove that 236, and I'm going to think about the 382. That might be, a nice dip buy level. And just to kind of keep the color scheme, red is, kind of caution. Yellow is getting to be a little bit cautious, but not as cautious as the red. Green is like, dip buy, start accumulating. It's getting a little more cautious. And that's like, it's pulling back lower than expected. But anyways, yeah, I'm just going to make this blue. Does that look good? Or maybe this blue like that. So we got this nice little color scheme there. And so that's around, 98,000. So that's a dip below 100, 98, maybe a dip by there. So what I might be intrigued to do, since I did note the lows over here right around 102, I might actually have two dip buys. Let's see. Actually, no, I'm going to do just one dip buy right now. Or not right now, but, after I close this video down, after I've posted it. So I'm going to do a dip buy at 102. Why not? And then if that gets hit, if that gets filled, then I might add another one at 98. Both of those being $20. So that would total an additional one daily $40 DCA with an average price of around 100,000. So I feel good about that. I think that this could continue lower, although I think that getting a fill at 98 is a little bit greedy. But maybe it doesn't come down to 100. So yeah, 102, I'm happy to be a little bit more aggressive with that. Nothing too crazy there, but I should probably note it on the chart just so, I am holding myself accountable next week. And so I'm just going to lock that in place and set that number, that coordinate to, let's see, 102, 123, 102,000. And I can actually move that over a little bit just so it corresponds with that, all of these wicks touching it. And, maybe I could actually make it, what was the low over here on the 9th? That was at 102, 330. But yeah, I'll just leave it there. The color of that, though, maybe I'll make that purple just to, continue with that color scheme, or maybe a lighter purple just makes it a little bit easier to see. So yeah, okay, so that's kind of my plan for Bitcoin over the course of the next week, to do a $20 dip buy at 102, and if that gets filled, then place a $20 dip buy at 98, and just do the daily $40 DCAs, which is not that interesting. And since I don't have that $20 dip buy order placed, I need to make this yellow, so I note that, I do need to pay attention to that after this video. And so now, with that being said, let's move on to the next ticker. I am just going to have a sip of water, and also note that I will be including timestamps to all of these. So if you do want to skip ahead to them, you can. The ticker's of interest, but if not, you'll just enjoy my perspective throughout this entire list. Because I do find this to be pretty useful. You also kind of just get a sense of my thought process around this, and I think a lot of trading any markets is really just about psychology, having a plan, having a thought process to what is going on with the charts. So that is what you see here with these videos. All right, but yeah, let's continue on to the next one, which is of course going to be Ethereum, ticker symbol ETH, as I'm sure we all know. I have been doing a daily dollar cost average of $36.25, but I also need to note that I do have a dip buy placed for, and I went over this last week, for $250. And so that actually makes that a little bit crowded. Can I expand this? We can still see all that stuff over there. So yeah, that looks good. And I still have that order placed there, so I'm not changing it. I will go over what that level is. Yeah, and maybe I'll adjust it. But I wanted to wait. We were seeing a pullback, and I thought that, maybe I want to adjust that dip buy. Maybe I don't. And yeah, so, but before looking at the chart here, so this is Bitcoin, let's flip back over to CoinMarketCap to populate the data over here. So Ethereum, let's look at that. It is the number 2 coin. I'm sure we're not too surprised by that. And the market cap looks like, if I said Bitcoin was 2 billion, I meant 2 trillion, because Ethereum is about $300 billion here. So just copy that number over, paste it right there, and I actually want to match what is going on. So let's just paste that here. And then I am going to do that and then divide by 1 million there. And we can see there are commas there. That's fine. It's adjusted it there. And we do have that market cap listed there. It has gone down over the past week. I'm sure it's not too surprising. So now let's look over at the chart here, Ethereum from Coinbase, and let's just look at the closing price from yesterday, so May 30th, and that was at $25.31.94. So $25.31.94. And the price of Ethereum actually, believe it or not, went up over the past week. If I flip back to last week's data, we can see that Ethereum closed on Friday at around 2,500. It's 27. And now it's at 25.31. So it's effectively been flat, but it's showing up green there. And it looks like I'm actually doing better on my Ethereum than my Bitcoin, up about 24% with ETH versus that 22% with Bitcoin. Continuing to do the daily dollar cost averages with Robinhood. And what was the level that I had talked about doing that $250 dip buy, which ends up being approximately my weekly dollar cost average. And so that level was right around this yellow line here at $2,323. So 2323, corresponding with the low from May 18th. And yeah, so I have a limit dip buy placed. And let's see, I'm going to actually check my notes here. So I have a limit dip I placed at 2,350, approximately corresponding with that level. So I was kind of under the impression that it was at 250. So I'm actually just going to check my phone over here just to see what that level is actually at. So I'm just looking at this in Robinhood. Ethereum limit buy, yes, is at 2350. 2350. So I'm just going to leave that in my notebook, and I'm just going to have some conviction in that, and I'm just going to keep it there for another week. We have pulled back some, maybe we see a bounce, but this is still holding up, and if Bitcoin really starts to sell off, really starts to roll over, I could see Ethereum come back to maybe test this level here, maybe the levels over here. And considering, what I just did with Bitcoin with a retracement that includes the 382, maybe I want to add it the 382 over here and make that blue, just like it was with Bitcoin. So yeah, that also kind of corresponds with that wick low that is around $2,351.51. Probably just being approximate, but it's possible also. I think it's approximate. I didn't lock that into place. But yeah, that does correspond with a dip buy there. So, I think that's fine to be maintained as the dip buy level. I didn't go over this with Bitcoin just because, I'm not really too interested in trimming that. I'm also not going to be really talking about levels I want to trim at with Ethereum or with Dogecoin, at least not yet. But I do have marked up here for Ethereum based on this high, which I actually need to adjust to be over here. And then the pivot low actually kind of goes back. So wait a second, what is that corresponding with? So that's this. This is a little bit odd. So what's that 786 from? Oh, it pulls back to, where does it pull back? Okay, it pulls back to here. So, okay, that's good, but then I just want to move that point over to the high here. And so that will be suggesting price going to around 3,100. Maybe it bumps into some resistance there, and around 3,000. Really not too surprising to think that ETH could be bumping into some resistance there. We're not there yet, so do consider that. But also, I guess maybe do consider that we have been putting in, here, it was not a higher high, but from this one to this one and this peak to this peak, we have been putting in higher highs, whereas the RSI has been putting in lower highs. So that's actually bearish divergence. So that does suggest we could be seeing a pullback. So I think there could be a nice dip buying opportunity coming down to, like I said, around, let's see, down to here. And then maybe from there, we get a bounce to the upside. And I'm going to make that a white line just to be suggesting where price could be going. And I also, I did not do that with Bitcoin, so I might want to, man, what am I doing here? Just want to delete those dots. Okay, I put some extra dots up there, don't need them. So there's that, and then so I might just flip back to Bitcoin really quick to see where I think this could be going. And yeah, let's just to get the doodle brush here. I could see this, oh man, got to hold it down. I could see this coming down maybe like that and then going higher. Maybe bumping into some resistance around that orange uptrend, or maybe going a little bit higher. And so for Bitcoin, I could see like a top around 114,000. So good to keep that in mind. But just like I did with Ethereum, I could potentially, actually, I mean, I don't think that we've necessarily formed the bottom. So I don't really think it's the best idea to do a Fibonacci extension from the bottom here to the top to wherever it pulls back. But, maybe I could just kind of do an approximate one to suggest where it could be going. So up to the highs here, and then let's see to that blue line. Let's see it pulls back to around 98,000. And so from there, we could see price getting up to around 135,000. Maybe we see it, maybe we don't. I have no idea, but that's just, a possibility for where we could be going to the upside. And so for ETH, that Fibonacci extension that I have drawn over here, that is not based on the lows over here. That is based on the low over here. So maybe what I want to do is actually adjust this. And I'm going to make this orange. And let's see, I am going to pull that back to the lows from over here, right around 1400, up to the highs here. And then that other pivot point, yeah, that's that yellow line, so right around there. And that could actually be suggesting ETH gets to around 3,400, maybe corresponding, oh man, these pop-ups. I got to start paying for TradingView. This level over here does correspond with this consolidation over here. So yeah, I mean about 3,000 to around 3,500. Maybe ETH could be getting into some resistance there. But yeah, I mean, so for Ethereum, I'm just going to leave this as is. I don't need to make any changes to that. So I'll just be doing a daily DCA, and I have a limit dip buy for $250, a weekly throwing money at it. And the reason why I want to be disciplined with that level is because it's not just a casual $20 DCA. It's a whole weekly DCA, dollar cost average at $250. So I want to be disciplined with that one. And so, yeah, I am leaving that unchanged. And now let's flip over to the next one on the list, which is going to be one of the faves, Dogecoin, ticker symbol DOGE. Let's check out what the market cap is for Doge. And let's see, that is number 8 on the list here, which you can see just behind Ed there. Doge up here, number 8. And that looks like it has a market cap of about 28, almost $29 billion. So let's copy that over here. Put an equal sign there and then divide that by $1 million. And so we can see that there, around 28, almost $29 billion. And now let's populate the price over there. I'm actually just going to pull up a new tab, oops, not unusual whales. Sorry, that's a bad habit, or good habit. Let's look over here, do Dogecoin. And the one that I usually look at for this is, I believe, Binance using the US dollar here. So let's look at that because Coinbase doesn't have all of the data going back, whereas Binance does. But yeah, so let's look over here. This is actually a pretty interesting chart. If I must say so myself, I'll talk about the levels that we did retrace to in a second. But yeah, let's look at the close from May 30th. That was at 1935. So let's put that over here, 1935. And so, I'm still up on my position, but only 11%. So this was performing pretty good before, but now it's getting close to my average, which is about 17.4 cents. And I believe last week it was actually 17.39. Yeah, it did go up a little bit because I just, why not? I'm just going to do a $1 DCA. Didn't really change my average too much. I do have a limit dip buy placed for either 1740 or 1739. I can just look over at Robinhood to get a view of that. Actually 17.4 or 0.174, so just like it is here. So I would do a $5 dip buy there. That is placed. I'm going to continue with the $1 DCA. And, I'll be happy if it does dip to below my average, so I can just start accumulating a little bit more aggressively. But yeah, let's look over at the chart because it did pull back to 786. So that is from Fibonacci retracement going from the low of May 6th up to the high that, let's see, where is that dot? Right here, corresponds approximately with the high over here. We started to see lower highs in the price, also corresponding with lower highs in the RSI and volume. So while there's no bearish divergence there or hidden bearish divergence, which would be if the RSI was going up higher highs while this is forming lower highs, No bearish divergence or hidden bearish like I just described there, but we did see a decrease in volume as it attempted to get up to those highs, and so that does suggest some weakness. We have seen a retracement to the 786 at around 1845, having hit a low so far today on May 31st of, let's see, a low of 1852. So right around that level. So pretty cool to see that. But, you know, what we might also notice is I could draw that or draw another Fibonacci retracement, but from the low over here, maybe to suggest that this could be continuing to go lower. And so if I do draw that, let's see, from this low up to the top there, we can see that we have broken below the 50%, but not yet the 618, which is the yellow line there. So maybe we could be finding some support, like I said, a little bit lower, right around, let's see, that yellow line is at around 18 cents, just above my average. So what I might do, I know it's a little bit cluttered, but I think I am just going to, actually, I'll adjust this one to only include that red level, and then I'm just going to click back on this one. So hopefully my default is still set like this. If not, I'll just have to adjust it. But we can see that level there. But if it does pull back lower, we do have the 618 at around 18 cents or the 786 right around 16 cents. And so both of those levels do correspond with like the 786, the consolidation over here that could be acting as support. And then with that 618, that does correspond with consolidation here right around 18 cents. That could be acting as support. And it also corresponds with the consolidation over here. So I think there's a lot of beefy support coming below 18. So if we do see that, I think that could be a really nice dip buy. And so since my average is 17.4 cents, I'm not going to have my dip buy level at 18 cents because I want to be more aggressively getting my average down if it does dip below. So I'm going to put in my little notebook here, my little journal, 17.4. I'm just going to leave that. And my trim level, in all honesty, with Doge, it's probably not $1. It's probably a little bit lower, but I'll evaluate that when Doge is really starting to rip later this year. If that happens, maybe it's next year or 4 years from now. I have no idea. But yeah, I don't really have a trim level for Doge because I think it's going to go higher. But I could talk about this level up here, which is around 30 cents. That is based on the more shorter term Fibonacci extension here. But like I did with, I believe, ETH, did I do? Let's see, this is based on, yeah, the more longer term, going back to this cycle low of around 1400. So I kind of want to do the same thing with Doge. So rather than have it be with that pivot point to here and the pivot low being to that blue line, which we've already broken below. So effectively, you know, I would need to lower that to here to get an idea of, or to line it up with the low that we've seen on the pullback. But what I actually want to do is I want to move this low over to here. And so if we have bottomed, you know, corresponding with that 786 that's in red there, so just based on the retracement from this low to this high, that retracement's around 1845. And that would suggest from this Fibonacci extension, price getting up to around 31 to 32 cents. If we do go lower, we can just see if I move this dot lower, like maybe to that yellow line, that would put the target at around 31. If we come back to that 786 in red there, right where the cursor is, that would put a price target right around or just below 29 cents. But I'm going to leave that up here where price is currently at, as that would be suggesting a price of around 31. Not necessarily, in my view at least, not a trim level, but a level to maybe expect some consolidation, a bull flag to be formed before breaking out to make the next move higher. Yeah, I mean, not going to change anything there with my Doge. $1 daily DCAs and then that $5 dip buy at 17.4 cents. And so, I will pull up the next one here in a second. I'm just going to take a little drink of water. All right. And so now the next one on the list is iExec, which is ticker symbol RLC. You will see based on the market cap, this is a very speculative play, a very speculative coin. I'm very curious to see where the price is at currently because it did pull back to lower than where I had noted that a dip buy it might be. And so that dip buy level, which I did not place, was at $1.13. And so before looking over at that data in the chart, let's look over at CoinMarketCap. It's going to be the one at the very bottom of the list, 408 as far as coin market cap goes. And let's see, the market cap over here is around $75 million. So it's pretty small, kind of risky, as I've said. And so I'm going to divide that by $123 million. And we can see $75 million market cap. It's a pretty small one and actually did come down over the past week. It was 86 million last week. So it's still coming down. And now let's check out the price. Man, these pop-ups. Okay. I'm going to need to create an account or pay for an account at some point, but not just yet. So RLC... looking at this, I want to find it on the Coinbase data going on the US dollar. So pull up that chart and wow. Let's first, before we get into it, let's add yesterday's close. So the close for RLC on May 30th was at a price of $1.365. So $1.365. So I'm down 57% on this one. And with that dip buy level, that was based on this fib retracement here. And that was the 786. And that was at a price right around 113. So we broke below it. I didn't dip by that. And now it's pulled back some, maybe kind of forming a double bottom here. So maybe that's of interest. Maybe there is going to be a very nice dip buying opportunity. But something to perhaps be concerned with is actually, let's see. I'm just going to move this up so we can see the volume a little bit better. We have seen volume come down here as this has been consolidating, so that's good. But then seeing this big spike in volume on this breakdown, that actually doesn't look so good. I'd like to see volume be lower here because then that would suggest more like accumulation as far as I understand Wyckoff analysis, which I am learning. But this does seem like a breakdown, so it doesn't look so good. It looks like it's backed by volume. Again, it doesn't look that good, but maybe what we could be seeing is, maybe finding some support. And I want to get my average down because I really want to trim my position effectively at break even. So I'm not just, endlessly exposed to this risk. But yeah, I guess, let's see. I just want to adjust this so volume is not overlapping with it. And let's see, the lows over here, so like the consolidation low. So basically the low from April 9th was 95.77 cents. So maybe what I want to do is draw a line over there, 91.77 cents. So 91.77 cents. That was not 91, it was 94. Is that what it was? No, what am I doing? 95.77 cents. I don't know where the 91 came from, or the 4. So yeah, right there in white. I'm just gonna make this, I guess, I don't know, I'll leave it purple because I don't know if this is good or bad. Maybe I'll just leave it as white. Yeah, it's neutral. I don't know. It's just a level there. And that corresponds with, both of these wick lows, kind of consolidation lows there. And actually, no, I mean, if I'm doing consolidation lows, what I probably want to do is do it with the levels up here. So let's do the close from April 8th. That was at $1.0007. So let's actually move this up here, and I will adjust that to $1.1237. And I'll lock that into place. We did test that level. It's a consolidation low. So I think $1 is, a nice potential dip buy level for RLC, especially if I was buying at 113 in prior weeks, not over the past week, but in prior weeks. I think that I should be taking advantage of this discount. I do have to make the buy, as you will see from the spreadsheet over here, from Coinbase, which has some fees that I don't like. And so what I had been doing is putting in $200 and then doing a $50 DCA over the course of 4 days. I don't really like how the daily DCAs are implemented with Coinbase because it's not at the same time that the purchase was made, the initial purchase. They tend to get later in the day. And so I don't really like that. I'd rather it be at the exact same time that I place the order, just so it's, consistent. Otherwise, I don't like that it just drifts. And so what I might do is maybe I'll consider maybe $200 and just a one-time buy, maybe $100. I'm not sure. But at $1, we're now at 103. So yeah, maybe it would be good to do 200 and then do incremental buys. So I'm not really sure. The low that we've seen so far today was 99.6 cents. And what could I see happening with this? Effectively, what I want to do is get my average down to around, what was I thinking, 220 up here, this yellow line. It's kind of far away, because then I would be able to, 220 is right around here actually, because then I would basically trim the majority of my position out at break even while still holding some. So if it pulls back, I can do like a DCAing. I guess not necessarily that easily with Coinbase because of the fees, but I could do, some dip buying, let's say, if it does pull back. And I could do that comfortably if I do trim my position size. But yeah, really like this level to trim at is where I could see there being some resistance. And so really like the trim level is unfortunately just going to be what my average is. So that's at 238. So as of right now, my trim level is 238. But, I was just pointing out the levels over here. That's around 230, not 238. And so maybe 220, maybe $2 is a good level to trim. So I'd like to get my average down more to be able to, exit at or trim the majority of my position at break even. But as of right now, that average level, that trim level is 238. So, I don't want to be selling at a loss. So my trim level as of right now is 238. Unless I do that $1 dip buy, then I reassess what my average is, and that would be the trim level. And so, for RLC, I'm thinking, I'm just going to copy it from here, make it a little bit easier. I'm thinking maybe a $200 daily DCA. So that's $50 over the course of 4 days, because that's a dip DCA in that sense. So that is kind of my thought process with RLC, but I may not do it because I did not get paid yesterday. I get paid next Friday. And fortunately, that Friday, I don't have many bills following it. So I can be a little bit more flexible, and I can maybe play catch up if I'm a little bit more aggressive this week. So I think that's intriguing, $200. I'll think about it, though. It's probably going to remain, it's going to be yellow because I have to think about it, and then I'll change it to white and talk about it next week. But if I don't implement it, then I will leave it yellow. But yeah, let's continue on to the next one. Just a second, going to have another sip of water. And so that next one on the list is going to be Ethereum Classic, ticker symbol ETC. And so it looks like my average is around $22.44. I have been doing a $3 DCA in Robinhood, daily DCA. And that is because then that adds up to about 1 ETC over the course of the week. Although that's a little bit aggressive, or it's more than one at this point as prices pulled back. But yeah, let's look at the data here. So let's first populate the market cap for Ethereum Classic. Let's see, where is it? It's down here, number 38, above Ed's head there. And we can see that's about $2.5 billion. Copy that and paste that number over here. And so we got that $2.578 billion right there. And then let's go over to TradingView to look at the chart. Ethereum Classic US dollar Coinbase. So let's check that out. And so what was the closing price yesterday? That was May 30th, and the close was at 1696. 1696. So I'm down about 24% on that. So that makes me feel like, yeah, I should still do the $3 DCA, and with price being lower, let's see. Actually, let's do some math on this. Let's see, got the calculator here. I'll just move this up here so you can see it. And so if I do $3 every day, actually, let's see. Let's do 17. That's the current price, right around there. 17 divided by 7 days. So that's a little bit over 2 over the course of the week. So yeah, I will leave it at $3. So I'm still accumulating. At least one Ethereum Classic wallet is on sale. But let's talk about some levels that, I'm just doing the DCAing, so I'm not doing like a limit dip buy or anything. But let's look at some of the levels over here. We have pulled back to that 786, and that is at a price of $16.75. Like I said, Actually, I don't think I said the low so far today was $16.45, so we did pierce that level, but we are trading above it. But maybe what I should do is like I did with, I'm not sure if it was Doge or which one, but just going from the low over here up to the high here. And it looks like I'm going to have to add those levels back. I'm going to do, let's see, the 618 in yellow, the 5 in green there, and it looks like the 50% we have pulled back to that in green. And so yeah, I might just leave that all like that. So we got these two retracements, this full one, and then this kind of from the midpoint up. So we do have a confluence of levels right around where Ethereum Classic dipped to. So that could potentially be the bottom there. And let's see, just thinking about how I could draw maybe a trend line to suggest where support might be. And so I'm just going to go over to the trend line tool. Just going to do the pivot low from April 6th and then, run that up here. And that does look like, we do see some wicks below, but no closes below that level. I'm just going to make it white there. But we did get, the candle yesterday, a break below that. Maybe this is a fake out. Maybe we reclaim it by the time the weekend's over. So maybe there's a dip buy. I'm not exactly sure. But if this does come lower, I could see it coming down to potentially find some support with like a double bottom here. And also this level here acting as resistance could be flipping over to act as support, just like it was here. That is right around $16. So I don't plan on adding aggressively dip buying or anything, but I could see $16 as a nice dip buy level for Ethereum Classic if it does come lower, but it may be at support now, just right around 17 cents. As you can see, it's trading right around there now. But then what are some levels to the upside? I did have this level mapped out there to the top side. Did get rejected from there, but that's in the past, so I'm just going to delete it. I have this bad habit of keeping levels from the past up on the chart, but really I need to move on from them. And so doing this kind of like shorter term Fibonacci extension, so going from the low here to the high here, and then pulling back to the low from over here, that puts price at around just shy of $23. But as you do notice, we did pull back to a lower low. So I probably want to move this to line up with the low for today so far. And that would be putting price target around 22. But what I think I should be doing is actually pulling this low down to the low over here to give a more, ambitious price target to the upside. And so that would be around 24.74. Maybe we don't get a fill at 24.74, so maybe 24. And let's see, is that my average? So my average for Ethereum Classic is 22.44. So I'd be putting in, not a huge gain, but I'd be putting in a little bit of a gain if I trimmed at 24. So that's what I might do there. And so, yeah, I want to note that I should be paying attention to these things in my notebook, but that's why I'm putting them in the notebook. I need to look at it later. So yeah, I could see Ethereum Classic heading up towards 24 to 25. And something that we could do here, maybe I could draw a trend line going up to suggest where the intersection of that line might be, when we might be hitting it. Maybe it's in the past though, so also good to consider that. So I'm just going to do it from approximately the wick high from April 7th. And then going up to, kind of the consolidation levels there. And so maybe actually, this does seem like I need to be a little bit more, pull it back a little bit. So I just got to move this out of the way. And so I'll adjust this to be the highs there. And so, yeah, that could be suggesting that we hit around 24 by June 7th. That's probably pretty ambitious, but, I think that's something to potentially keep in mind. So I'm going to color that line red to suggest that that is a, take profit level. Whereas this white one here, I'm not really sure. I'm just going to leave it as white. I think we could be going lower. But yeah, 24, that seems like a good, reasonable target, and that is above my average. So I feel good about that. And yeah, so I'm just going to continue to do the $3 boring daily DCAs with that, because I want to trim when this gets up to my average or, slightly higher. And then to be able to have that cash on the side for DCAing into other positions as they are red, if they are red. But yeah, currently Ethereum Classic, RLC, those are both in the red. I think the rest of these down here will be as well, but I do have these top threes up there in the green. I feel good about them. But yeah, now let's flip over to the next one on the list, which is going to be Ondo, ticker symbol ONDO. And so let's check out the market cap for Ondo, which is number 36, so just above Ethereum Classic in this list, which was 38. Ondo is 36. We have a market cap of about $2.6 billion. So just going to type that in, that cell over here, paste that there, and divide that by 1 million. All right, and now let's check out the price of Ondo. Coming back over to this chart, Ondo USD. Want to be doing that from Coinbase in the US dollar. So let's check it out over here. Got all my doodles on it. And we have broken down from some levels. And it looks like we hit a low, or closed at a price on May 30th of 81,879. So 81,879. And that did come down about 20%. I did not place a $100 dip buy on Ondo, and that dip buy level would have been at 90 cents, okay? And so we did go lower than that. As you can see, the close from yesterday was lower than 90 cents. And we did hit a low today so far on the 31st of 78.386 cents. So maybe around 80 cents is a good dip buy level. But let's just kind of consider that I do have this Fibonacci retracement. And that's actually, why I've drawn it going back to the lows is because for some of these, we have broken below that red 786. So yeah, I am just going to adjust the chart here So the volume's not too much in the way, but just going to come back to the low here. So I'm going to drag this pivot low to over here and leave that pivot high corresponding with the high from up here just into the future a little bit, so we can see it. You can just see that dashed line lining up with the wick high from May 14th. And so for, let's see, Ondo, we could potentially be going lower down to the 786, which is around 76.5 cents. But maybe we've seen the low for the weekend. We don't go that low. And actually maybe the 618 here is the dip buy level, and that's at about 84 cents. So for me, thinking about this, looking at this, maybe I want to consider it if it does come down to 76, 77 cents, 80 cents. But maybe that doesn't happen, so maybe 84. Maybe what I want to do is keep an eye on this with, actually, no, I was going to buy last week at 90 cents. I didn't. So, I think I should be grateful for a price being able to dip by lower than 90 cents. So I'm going to say around 84 cents is a nice dip by level corresponding with that 618. So 84 cents. I should be grateful for that. It's sub 90. If I would have bought last week, then I'd probably be more disciplined and wait for an 80 cents, let's say, meet in the middle there between 84 and 76, right around 80. We did pierce that though, and maybe that's the only time we test it. And that does kind of correspond with the bottoms over here, the consolidation lows over here, as well as here. So it does line up that could be a level of support. And it's just a $100 dip buy. It's not hundreds, which is like a little bit more risky with RLC. And then some levels to the upside that, one could trim at. So let's see, my average for Ondo is 103, $1 psychological level. And so $1 is right here above this green uptrend. Maybe I want to switch that to white now. And maybe I also want to make it a little bit thinner. That is a level that we could be bumping into, maybe into the future. Price would be around $1 there. But yeah, so I think I need to just consider, my average. And that is going to be 103, which may change if I do get a dip buy in there. So I'm just going to do 103. And that would be to trim. So then I could buy back more aggressively if it does pull back below my average. I do have a larger position in Ondo than I should, considering the risk. But yeah, let's also, consider these levels to the upside. This is a Fibonacci extension. As you can see there, we did break below the level that I had over here marked. So I'm just going to drag that to be corresponding with the lows there. We did also go higher than the pivot high here. Kind of odd that I didn't have that lined up. And this actually is kind of odd. Why are those lines? That's those 3 points. Okay, so yeah, this is the low here. I want to make it the low that was hit on April 7th. And then this. Okay, yeah, so that's the high point there. And the line begins there from that high. And so for that, the 100%. And actually, maybe I don't want to just do it at my average. Maybe I want to, take advantage of this extension, the thesis that we're going to see euphoria, we're going to see blow off tops and whatnot. And so I am just going to adjust this because I don't need the 1,618 there. I think that's getting a little bit greedy. And so yeah, this 100% extension is around 125, 126. So maybe I think my trim should not be at 103, but maybe around 125, or maybe not to be so greedy with it, 120. Or 123, I don't know, 20%. 20% profit, and that would be if my average is right around $1, that would be right around 120. If I do dip buy that would be around 120. So I'll just do 120. I think that seems reasonable. And with that being said, RLC though, I'm way over bought with that, so I'll leave that trim at my average. So I think that's fine. And then I might actually just flip back to Ethereum Classic because I am curious to see, why did I say 24 for Ethereum Classic? Oh, that's because of that extension. So yeah, that's cool. That's what I want to be doing this based on. So yeah, 24, Ondo 120. And then now let's flip over to the next one on the list, which is going to be Litecoin, ticker symbol LTC. Let's get the market cap data for Litecoin, which is number 21 on the list. And that market cap is around 6.6 billion. And we can see that over here, punching that in, dividing by 1 million. 6.6, and it looks like Litecoin actually went up over the past week. So Litecoin 6.6, it was 6.3 last week. So it's nice. It's been a good performer in that sense. It's been a good one. And so the price for Litecoin, let's come back over to TradingView. Oops, Litecoin. I want to see Coinbase US dollar right there. And so the closing price, I should note, for Friday, May 30th, was at 85.68. So let's do 85.68. Did come down. I'm down about 15%. And that is, dollar cost average, not dip by region, because dip by would be sub 5%, negative 5%. So I can make this, $1 right there. And I believe, I think I do have that placed, but I need to make sure that it is placed there because I'm changing it up here. I might have to change it in Robinhood. And I also should note this $100 dip buy with Uphold, something that I need to place, but I'll think about it. I may not end up implementing that. But Uphold with the Ondo, I think so. Coinbase with RLC, I think I probably should. It's like, because it's around a dollar. So, but yeah, I'll think about it. I'll assess. But yeah, so thinking about Litecoin here, my average is just above $100. Current price is around $85. So yeah, I will be doing a dollar DCA with that. But let's look at some of these levels. And really, it's like the same type of thing I did with all of these charts. I did this shorter term Fibonacci retracement. We've already come down to the 786, which is right around 86.50. And so I think that we need to adjust that Fibonacci retracement, bringing that low down to the low over here. And that high, just bringing it forward into the future a little bit. And so it does look like we have retraced to around the 50%. I think that we could come back a little bit lower to the 618, finding some support with the prior highs over here. So that makes sense. And that would be to a price of around $80. And actually, maybe I just want to do, no, I'll just do a dollar DCA, but keep this in mind. And then, I'll evaluate this next week. And it's like, yeah, I should have just done a dip buy at 80. And so I'll have the dip buy level there. Trim level, so my average is around $100. But let's see where this could be going. So I've got this Fibonacci extension up here to the upside. That is based on the low over here, so that's good, up to this high. But then the low here, actually, need to pull that down so far to the low that we've seen for today. May 31st, and that's a low of 83.19, and that would put the price target around 127. We do have, what's this up here? That is a more short-term Fibonacci extension. I'm actually just going to delete that, but that's around 120. And so if my average is around $100, a 20% swing is around 120. That's not getting too greedy. That's also potentially corresponding with this uptrend here maybe getting to, 120, 115 to 120. So I think 120 kind of splits the difference between that uptrend, which is actually, around 115, 113, up to around 127. So 120 seems like a good trim level, and then that's a 20% swing, much better than saving. So, I'll take it. And that's just a trim. So then I adjust my Litecoin position to be the amount that I'd like it to be as far as risk management goes. And then if it goes up, great. If it goes down, maybe I'll add a little bit more. Maybe I'll just chill. All depends. But it'd be nice to have that cash on the side to add if it does dip. Like it's dipping now. So yeah, I just want to be getting that average down and thinking about it going up to 127, but me trimming at 120 and chilling then after that. Okay, so this is in dip buy territory, so I got that $1 over there. So we'll continue on to the next one in just a second after I have another sip of water. All right, and so the next one on the list is going to be Solana, ticker symbol SOL. Looks like, I need to add that market cap data here. So let's check it out on Coin Market Cap. Scroll up to the top. It's going to be an upper one, number 6 in the ranking. Solana has about an $81 billion market cap. And if we just do an equal sign, paste that over here and divide by 1 million, we can see that $81 billion market cap there. And let's get the price added based on what we're seeing in TradingView. So SOL, looking at the Coinbase, not derivatives, US dollar data. We can see some of these levels that I have up here. Does look like we've nearly pulled back to that 786, but that is the shorter time frame Fibonacci retracement, so I will need to adjust that. But first, I want to add the closing price from May 30th. And that was at a price of a 156.28, 156.28. And so it looks like, hey, miraculously, I assumed I was still in the red because I did get a fill. I believe I got a fill on a dip buy for Solana. Yep, because let's see, did we go below 149? We hit a low. Actually, that would have been today. So I'm not sure when that dip buy was placed. Let's see, or filled, I should say. So I'm just going to check it out over here on my phone just to see when I do have a daily buy paused, so I'm not buying. A limit dip buy was filled on, let's see, May 29th. And that was at a limit buy price of 164. Why did I add at 164 when my average is 150? That is because I saw that as support right around here, also corresponding, with this 50% retracement. So I thought that'd be a nice dip buy. And, I was wrong. It did break down lower. And so maybe it goes even lower. And the way that I would want to assess that is not by looking at this Fibonacci retracement on the shorter term, but extending it back to the lows over here from, it's probably going to be April 7th, just being approximate, and then bringing this up to the high here. And then what is the, oh yeah, that's a Fibonacci retracement, not an extension. So that is going, yep, to that high up there. And so what we can see is I probably want to then add the 382, and I'm going to make that be blue. And so we can see we did pull back to that. That was around 152. And, my average is right around where that low was. So maybe what I want to do for the dip buy is actually just do it, right at around 150 or 149. So a $5 dip buy at 149. Maybe we get a wick below that level, but not all the way down to this 50% retracement, which is at 140, 140. So that might be greedy getting down there, or if it does head down that way, then I just start doing the $1 daily DCAs. But for a $5 dip buy, and actually this is something that I wanted to just to think about, because there are 7 days over the course of the week. Maybe I want to make this a $7 dip buy if I do get a fill on it, because I do have more conviction in Solana, XRP, and Cardano than some of these other ones. If I only get a one dip buy opportunity and then it goes back up, then I get $1 over the course of the week consolidated into that dip buy price. And so for Solana, I know it's risky given that where price is currently at, but maybe I want to do that below my average at 149. Not getting too greedy at 141. If it dips below 149, I just do daily DCA, so that's no big deal. So yeah, I'm going to adjust this to be 7. And I am going to note in my notebook that that level for the dip buy, not based on anything technical, but that is going to be 149. And so 149 there. What is the trim level now to the upside for Solana? Which in all honesty, for Solana, I probably wouldn't trim until closer to the end of the cycle, closer to the end of the year. But what we can see is if this does bounce, from this shorter term Fibonacci extension, hopefully you can see the blue dots there, the circles, that's going to be around 206, right around $200. But if I do drag these levels to correspond with the low over here from April 7th, got that high, and then pull this back to, assuming that we have hit the low here, what is that price target? That's going to be around 244, almost 244. But maybe we don't get up there all the way. So maybe like 240. Maybe that's a good level to trim at. Maybe, let's see, what does that correspond with in the past? That's not getting a new all-time high, so I feel like that's a pretty reasonable trim level, 240. So I will put that in my little notebook here. If I start to see some euphoria, I can then refer to this and see, hey, maybe I want to trim there. But, as time goes on, these levels will change, so maybe that level will change. But yeah, that's kind of my thought process with Solana. I do need to place a $7 dip buy order. Because I want this to be, I want these three to be higher than, Litecoin, Ondo, Ethereum Classic, and RLC. I just have more conviction in them, and potentially above Doge as well. But, I will just leave that, there at 149 at least for now. But that does make me think maybe I want to do a 5% below my average. But yeah, I'll just do that. It's fine. You want to be more aggressive when it's below your average than above. So I think that's a fine thesis. And then just do dollar daily DCAs below it. But anyways, let's move on to the next one, which is going to be XRP or Ripple, ticker symbol XRP. Let's check out the market cap for it over here. This is the number 4 on the list, with Tether being between Ethereum and XRP, which does have a market cap of around $127 billion there. It's just going to copy that number over here and then divide that by 1 million. So we can see that, and then let's get the price from TradingView. XRP, looking at the data from Coinbase, but not derivatives. So we want the US dollar right here. And so we can see that the closing price from Friday, May 30th, was at 214.08. So let's do 214.08. And so I am actually negative with this one. Currently, my average is around 231. And so what I want to now do is the $1 daily DCA with XRP. So I'm just going to make that yellow so I know to adjust that in kind of my strategy there in Robinhood. And so let's see. So this one, let's look at the chart. That's the next thing we need to do. What's a good, dip buy level? Which for this one, I probably wouldn't execute on a dip buy. I just do the, casual $1 daily DCA. And so looking over here, we have pulled back below that 786 from the shorter term fib retracement. And so what we want to do is adjust this Fibonacci retracement to correspond with the low from over here, not the low from over here. Just get that bigger time frame perspective. And then the high corresponding with the tops over there, but I'm just going to drag this forward into the future. So we got some targets to the downside. We did, although, pull down to, let's see, that 50% retracement, which is going to be right around $2.14, right around there. But we could go lower. The 618 is around $2.01, and the 786 is even lower, but I won't talk about that. So yeah, I mean, this could be going lower, but yeah, dip by levels, I would say around 214, which is where it closed last night. So I'll just put that in the notebook here, 214. Dip by level. Let's see what a trim level is to the upside. And so with a shorter term Fibonacci extension, which is not going to be correct, that target was around 286, but I do want to move that pivot low to be the low over here. From that April 7th low, got the high mark there, and I need to adjust this level to the current low that we've seen on that pullback, and that will put price right around $3.13. But $3, also thinking about that just being like a psychological level. But maybe we could get a little bit higher than that. This is at 312, 313. Let's see over here. We got some highs over here, 294. So yeah, I mean, I think that 3 is probably a nice trim level, nice round number, because I think it could be going higher than that, like to around 310, but maybe not. Maybe it goes up to 3 and they say, oh, it's going to, hit all-time highs, and then it stops around 3. So that's a good level to trim at in my view. And yeah, but I'm just going to be doing that dollar DCA for XRP because I am more than 5% below my average. And yeah, then the next one on the list is going to be Cardano, ticker symbol ADA. So let's check out the market cap for that one. It's number 10 on the list here. And that is, market cap about $24 billion. So let's just paste that over to here. 24 billion divided by 1 million. See that there? And let's get the price from TradingView. But going to be looking at the Coinbase data. So Coinbase derivatives, we want the Coinbase US dollar. And then just let's check out the close from yesterday. That was at a price of 68.93, so 0.6893. And so I'm down about 5% on that one. So that's fine. And so with that being said, like XRP, I'm probably just going to be doing the daily dollar cost average, $1 a day, which will end up totaling, about $7 over the course of the week. So nothing crazy. Yeah, so let's look at the chart. We did hit a low today so far on the 30th of 65.67 cents. And that level that we closed at yesterday does correspond with the 786 from the shorter term Fibonacci retracement. But what we actually want to do is pull that down to the lows over here from the 7th. Make sure that high is lined up with the top there and just extend it into the future a little bit. So we've got the levels over there. And so we could see that it's currently right around the 50% retracement, around 68.8 cents. But maybe it dips a little bit lower to around the 618, and that's going to be around 64.65 cents. But considering it is at a 50% level, it is below my average, just like what we did with XRP being at, that level. I do have the 214 marked as the dip buy level, and right around here, right around 68 cents, 69 cents, got to have some fun with it. I will make that be the dip buy level for Cardano, which, I'm just doing the daily DCAs with that. So, and my average is at 72 cents, I should note, I guess. And so let's just think about the trim level to the upside. Where might I want to take some profits? And so this Fibonacci extension is at 93 cents, but that is the shorter term Fibonacci extension. So we want to extend that down to the lows over here, being approximate, high up here, and then pulling back to the current low, which was hit yesterday. And so that would be suggesting price to around $1. Kind of makes sense. And it looks like it's at $1.08, right around $1. And so I might just say trim. Sorry about the clicking and stuff. I just have a nervous habit of doing that. And kind of like Boris from GoldenEye, Boris. But yeah, $1 trim up there could be something to be paying attention to. But yeah, with it now down around 70 cents, I think it's time to be adding on those dips. And so that is what I am doing there. And then so now let's look at the next one on the list, which is going to be the official Trump coin, ticker symbol Trump. And let's check out the market cap for that one. That's going to be lower on the list. That is number 42 for my list. That's third from the bottom. And we can see that the market cap is about $2.2 billion. So let's copy that over, paste that here, and divide that by 1 million. So we can see that there are lots of twos. And let's see the price for Trump. The Trump coin. Coinbase US dollars. Let's pull that up. The closing price from yesterday on the 30th was at 1084. So it looks like, yeah, I am in the red with that, down about 18%. So I'm just going to continue with the $1 daily DCA. And I have to say, this week's going to be annoying with all of these daily DCAs. It's very boring tedious, I should say, to be populating a table that I track all this stuff in. I like to do all this stuff in Excel, keep track of it, very nerdy, but it does help with, in all honesty, with taxes, because if I transfer this to a wallet, and then move it to an exchange for taxes, they don't know what my average is. And, so I need to kind of be keeping track of it for that. And so that is what I like to do. But yeah, so daily $1 DCA, now that it's below my average, which is $13.29. And let's just see where this could be coming down to, kind of, extending this Fibonacci retracement, which we did break below that 786. But if I do pull this back down to the lows over here and extend it, up to the tippy top highs that we've seen. We did pull back to around that 618 at around 1070. So that's good. Maybe we do pull back down to the 786, which would be around $9.13, but maybe we don't go that low. So I think right around 1070. Or let's have fun with it, 1069. Dang it, I keep doing that. I'm sorry, the clicks. 1069, dip by level. I'm going to be doing some DCAing there. And let's see. We want to be thinking about trim levels to the upside. So currently I have that fib extension to a price of around 1965. And that does look like it is the miraculous. How did I have a sign up? Oh, because it looks like there's a double bottom here. So that's pretty cool at that 618 there. And so with that being said, I'm not going to adjust that 100% move. 1965. And, I think maybe a trim level. I think it could be going back to these highs here at 40, 43, even higher than that, around 49. But, managing risk, whatnot, you got to be doing that, got to be responsible. Around 1965 is that trim level. So I'm going to be responsible and not do 20, not do 1965. Dang it, I keep doing the clicks. I'm sorry. I'm just going to do the trim level at 19. I think that's reasonable. I think that's responsible. That'd be taking some risk off the table, managing my exposure, managing my risk here, which I've hidden from you guys. That's just how much money I've put into these. So all of these down here, basically below these three, I'm a little bit heavier in those than these. As you can see, they're lower on the risk curve or the risk list. But these I will want to have, about the same exposure to them. So Trump, I will trim that so I have it balanced when I do get back to the trim level, which is going to be above break even. So yeah, dollar DCA with Trump. And then so now just above Ed's head there, we've got Chainlink, which is ticker symbol Link. Let's look over at what the market cap was for Link. It's number 13 on the list. Market cap about $9 billion. And so let's just add that over here, divide that by 1 million. And so we can see about $9 billion there. Looking over at the charts, so Link, looking at the Coinbase data, US dollar. So let's check that out. And we can see the closing price from yesterday, May 30th, was at $13.90. And so that is below my average, currently down about 35%. So I'm going to continue with that $1 DCA. My average around 21.28. And so let's see where I think that this could go lower. We did break below that shorter term 786. So I think it's important for us to look at this on the bigger time frame perspective, going to the low, approximate low from April 7th up to that high from May 12th, and then adjusting. Wait a second. That's for the Fibonacci extension. I don't need to adjust that. I'll adjust that later. And so we have broken, it looks like. Oh, nope. Wait, why? Okay, so Link, this is where I want to adjust this one here to the low over here. So that looks better. The shaded area is moving, got this up to the high, just going to extend it a little bit forward into the future. And so we did pull back to the 50% retracement around 14 bucks. So maybe that's a nice dip buy level. Could be going lower to the 618 around 13, or maybe even the 786 around 12. But so for now, I'm just going to leave, the dip buy level at around 14, because that is actually, no, not 14. Yeah, 14. I was thinking that was my average, but that was the price from yesterday. So yeah, 14 is a nice dip buy level in my view. And then now let's think about the trim level. And so currently on the shorter term, what I was previously adjusting by mistake, we do have this Fibonacci extension up to around 1959, but that's shorter term, and it doesn't look like it's correct because this low should actually be adjusted to the low that we've hit today, which was at a price of $13.40. But also with that being said, I want to adjust that low, the beginning of it, to be the low from April 7th, so right around here. And so that would be putting a price target around $21.26, but maybe we get to some resistance around 20. So I think that's a reasonable trim level, 20 bucks. So I just want to be managing the risk up there. In this region from this yellow line here at around 1987 up to 21.26. So I've got that marked in my notebook, so I feel good about that. And then now I'm just going to slide this up so you can see the remaining tickers on the list. We've got Aave, ticker symbol AAVE. Let's add that market cap data. And let's see, that is number 30 on the list here. And the market cap is around $3.8 billion. So let's populate that over here. Oops. I didn't copy it apparently. So let's see. I don't know why it didn't copy. Sometimes it gets a little bit wonky. So 3.8 divided by $1 million. There's a typo. Just didn't copy the numbers or something. No, I don't want emojis. I want to get rid of those commas. There's a problem with this formula. How is there a problem with that formula? I'm just going to escape. Let's start over. Copy this number. paste it up here, divide that by $1 million. 3.8. There we go. Lots of trouble there, but it's done. And so that was Aave. So let's pull up the Aave chart. We want to be looking at Coinbase, US dollar. So very good there. And this one, this has gone on a pretty nice rampage. I do remember that. But it was, I believe, below my average. Yeah, let's see what the closing price was from yesterday. On the 30th, closing price was 251.14. 251.14. Below my average by about 10%. So going to continue with that dollar cost average there. And this is actually the one that made me realize, well, I should probably put some trim levels on this because it looks like it's on a rampage. Maybe I can take some profits or trim it, break even, you know, whatever. And so, yeah, I mean, my average is around 278. But let's keep in mind where this could be pulling back to, just like the others, gonna do a Fibonacci retracement over here. So the low from April 7th, just being approximate, and then coming up to the high, again, being approximate from around May 27th. We got these levels to the downside. So downside levels, not even getting to the 50%. We haven't even gotten to the 38%, or 382, 38%. So that's around 217.63. And so maybe that's, you know, a good level to dip buy on this. And maybe with some of these, maybe I actually do want to hold off on a dip buy. So maybe I do 218 with Aave. And I do a limit dip buy because I could see that pulling back more. And then I'm not doing a daily dollar. And I take advantage if it pulls back. And if it goes on a rampage, you know, then that's great. So what I want to do is probably stop the daily dip buys. Do a $7 dip buy there if it does pull back more. And maybe I want to consider this with some other ones. Yeah, I mean, I think these are fine to do the dip buys on them. Maybe this one, maybe this one. Maybe I want to get Cardano a little bit more aggressive. So maybe I do another $7 dip buy and not do the dollar DCAs with those. I'm not sure. I think for now I'm just going to leave it. But yeah, $7 dip buy, and that should be to around 218. I think it's pretty reasonable that it does come down that low. It needs to correct some. But if that doesn't happen, that's also fine too. Although, you know, this makes me think, you know, I am still negative, that I should be dollar cost averaging. Well, this is, you know, but it's only 10% down. And so, yeah, maybe I want to adjust these as well. So I'll actually come back to those. I think that makes sense because this is 10%. I'm going to wait for it to pull back more. Maybe those I should wait to pull back more and do a $7 dip buy, not a DCA on those. So I'll think about it. But I'm probably going to do it at the end of the video. And yes, so with this possibility of this coming down to around 218, where could this, though, be going to the upside? So I do have this Fibonacci extension here, but it's not based on all those highs, those lows. So I'm going to need to adjust this actually quite a bit, bringing this low to be over here, that low from April 7th. And then the recent high that we saw, looks like on the 27th. And then pulling back, let's see if we do come down to around 218. That would be suggesting a price of around 387, approximately corresponding with that yellow line there, the consolidation highs over here. So 387, but maybe it doesn't get all the way up there, so I'd say 380 is a nice trim level. I'm going to delete that doodle, just try to clean up the chart a little bit. So, yeah, 217, 218, really, and then a move up to around 380 to 390, somewhere around there. So that's intriguing. Okay, and so yeah, I'm going to just make this yellow and make these yellow because I should treat them the same with the more aggressive $7 dip buy if it does pull back to the level that I see. And so, yeah, the next one on the list is going to be Stellar or Stellar Lumens, ticker symbol XLM. And so let's look at the market cap for that one. And XLM, Stellar, is up here at number 15. It's around $8.3 billion. So just copy that over to populate the market cap over here. Divide that by $1 million. Let's see, is that, I think I put too many zeros there. 1, 2, 3, 1, 2, 3, yep. So 8.3 is what I said. That actually went up over the past week. So XLM was 8.67. Now it's 8.23. That doesn't make sense. XLM 8.67. So that's because I'm referencing the wrong cell. So over here, this is cell 15, and what I want it to be referencing is cell 15. So over here, I'm actually going to check both of these. I'm just going to check the conditional formatting, manage rules for this one. These are both 15, and they should be 24, 24. Weird. 24, 15. Yep, so that's Pepe. So this is 15. 15. And then this one was probably 16 as well. No, 15. Oh, but it is E, and this should be D. So, then that should be red. Yep, there we go, fix that. I'm actually just going to check this Litecoin one because maybe I screwed that up as well. So that was 8. Litecoin is 8 again. So let's just check these. Conditional formatting. This should be 8 and 8. Should be D, not E. And, oh wait. No, this should be E. And this should be D. There we go. Okay, so those should be correct. And actually, maybe I did just screw that up with XLM. Maybe I'll just do it D first. Manage that so I'm not getting confused. Edit rule. That's D. So that's good. And then this one, let's just check that. E15, that should be E. So I did screw that up by changing it. So, okay. And so, yeah, I mean, I think that that's something that I am going to want to check with all of these. Maybe this little color scheme thing, the conditional formatting, is not that great because I do have to adjust it every week based on how the coins move up in that risk ranking. But anyways, that did come down, so that makes sense. Litecoin did go up a little bit. But yeah, we'll have to check all of those after this. Maybe I'll do it at the end, but maybe not. Maybe I'll do it after this is done, maybe after when it's uploading. But yeah, let's look over at the chart for XLM, Coinbase data, US dollar. And we can see, let's check this out. The closing price from the 30th was at 2652. So 2652. And so I am down about 35% on that one. And my average is around 41 cents. So not looking so good here. And yeah, I might actually just want to adjust that formatting there. Don't need all those extra zeros. And yeah, so just doing that. And so we can see I'm down 35%, doing $1 daily DCA. We have pulled back to more than the shorter term 786 retracement. So let's adjust this to be longer term. And so just going back to the low here from April 7th, and then just extend this a little bit forward into the future, but just lining up with the approximate top from over here on May 12th. And we can see that we have retraced to about the 50%, and that is around 26-27 cents. The 618 is at around 25 cents. So maybe we dip down to there, corresponding with the lows over here. So I could see that. But I will just note around 26.7, or I'll do 0.2. I'll just do 2.7. Don't need to be getting into. Well, actually, no, I'll do 2.69, having fun with it, because I did go to the third decimal place with Doge, so I might as well with XLM. But yeah, so this possibilities to the downside. The upside, it looks like this 100% extension to the upside is based on the shorter term here. So I'm going to want to move these pivot points. So move this beginning to April 7th over here. I do have that high up here, but then I do want to drag this one down to the lows that we've hit so far today for the 31st, which is around 25.9 cents. And that puts the move up to around 39.3 cents up there. And so, let's see. What is my average? Around 41 cents. So I'd basically say that, my average is the trim level, 41 cents, break even. And so I do have that there. So, just going to be doing $1 DCA with that. And then moving on to the next one, which is going to be Pepe, ticker symbol PEPE. Let's check out the market cap for Pepe, 27 on the list. And that's about $4.9 billion there. Copy that over. Divide that by 1 million. And let's check out TradingView to see the chart for Pepe, not market cap. I want US dollar on Coinbase. And so we can see the closing price for Friday, May 30th was at 1162. So 1, 2, 3, 4, 1162 or 12. And I'm down about 36%, so doing $1 DCA, nothing too exciting. My average is around 4 zeros and 18. And let's check this out on the chart. The shorter term Fibonacci retracement, we did dip down to hitting a low today of 4 zeros and 10.95, which corresponds with that 618 at 10.94. 4 zeros, 10.94. But I think we should look at this on a little bit longer term time frame, coming back to that low. This is actually from March 11th. And so from that, let's bring that down to that low, going up to that high up here. I'm just going to extend that forward to the future just a little bit. And we can see that we've nearly gotten to that 50% retracement, starting to correspond with the consolidation highs over here. Getting into that meat of that consolidation would be around the 618, which is 5 zeros at 949, right around 4 zeros and a 1. Also a support or resistance over here, so could be acting as support if it does pull back some more. But yeah, I would just say that the dip buy level is going to be around 4 zeros. 1, 2, 3, 4, and an 11. I'll do that, approximately corresponding with that 50% retracement. And if we do a Fibonacci extension, looks like I need to draw one of these brand new for Pepe. And so that's going to be from the low over here, just being approximate, going up to this high here. And if it does pull back to, where it's currently at, or right around there at that 50% retracement, just a little bit lower than current price, that could be up to around 4 zeros and 22, but maybe actually this does come down to that 618, and that being right around, the 5 zeros and a 9. But let's see, I make it, to around, where it's currently at. I'll just do that. That's around 22. If I were to have that down to here, that would be to around 20. So yeah, I mean, I feel like 4 zeros and a 2 is a pretty reasonable, it's just rounding that 4 zeros and a 2 down a little bit. And so that could be a nice trim level. And so I would be keeping that in mind. But then the next one on the list is going to be Uniswap, ticker symbol UNI. And let's look over at the market cap for that one. That's going to be number 29, just below Pepe, which is 27. Just above Aave, I guess I should say, which is 30. So Uniswap does have a market cap of $3.8 billion. Copy that over. Divide that by 123, 123, $1 million. And so that actually says that it's up. So let's check that from the past. So 3.8, Uniswap 3.7. So yeah, it is up a little bit. So that's encouraging. But the price, is the price up? Let's check that out in a trading view. So Uniswap, market cap, nope, US dollar from Coinbase right there. And so the closing price from yesterday on the 30th was at 6.209, 6.209. And so that's actually green, it looks like. From last week, I was at 5.98. So that's actually, performed well. I guess I was down 52% last week, and now I'm down 47%. So not looking so bad there. And that's why I think it's nice to be DCAing on these dips. And so for that one, that is, what am I thinking? I've got a little bit of a brain freeze here. I think we just want to look at the charts to see, dip by levels, adjust the chart here. This is actually a Fibonacci retracement. This doesn't really need to be adjusted, or at least not much, because that does go to the low. That was from May 7th. Oh, actually, it does need to be adjusted a little bit. The low over here from April 9th was a little bit lower. And then that corresponding with the high that we actually hit last week on May 29th. Now, pulling back some, we are currently right around that 50% retracement at around 612. But we could be coming back down to the 618, which is around 575. So maybe that's a good one to be keeping in mind. But yeah, just a dip by level. What did I say? 612. So I will note that here, 612. And then maybe the trim level, if this was to go to the upside, let's see, I do have this extension up here to around $8.50, but I can adjust the beginning of that retracement, or extension I should say, to the low over here from April 9th, adjust the top to the more recent higher high, which, by the way, higher high in the stock price, lower high in the RSI, that's bearish divergence, and then draw this, let's say just down to that 618 around, $5.75. And so where could that be suggesting price be going? That's around 887, 888. And so Uniswap, $8.88. What's my average? Around 1178. So that's where I would want my trim level to be at my average. And so I'm going to chill with that. 1178 trim level. Okay. And yeah, just a boring daily dollar DCA. And the next one on the list is going to be Avalanche, ticker symbol AVAX. Looking at the market cap, it's number 14. And the market cap is around $8.7 billion. Copy that. Paste that over to here and divide that by $1 million. 8.7 right there. And I'm just going to check to make sure 8.7 this week did come down, so that does make sense. And over here, the price, that is going to be, let's see, the price of Avalanche. I want to pull that up in TradingView. Avalanche US dollar Coinbase, so that's the one. And so the closing price from yesterday on the 30th was at 2057. 2057. Let's see, that went down relative to last week. Whereas actually Uni, I wanted to check that 6.2. And Uni was, yeah, so that did go up. Okay, so this did come down though. Avalanche did come down. 2057. It's below my average, 13% below my average. So I think I could do, you know, a dollar DCA with that. I'm just going to make it yellow, so I make sure that I have that placed to be getting my average down while it's lower. And so let's just consider some dip buy levels with this. So I do have this shorter term Fibonacci retracement with that 786 where we're currently at right around 2080. 2082 is the current price. With the low today, though, being 1979. Thinking about some smashing pumpkins there. And yeah, so I'm going to adjust this Fibonacci retracement to the lows that were hit on April 7th. And then adjust the high, just moving it forward to the future, corresponding with the wick high from May 12th. I'm actually just going to delete that doodle because we did not follow that. We're breaking down below this trend line. And so the 50% retracement is around 2074. So that seems like it's a dip buy level. So I'm going to note that in the book here. But we could be going lower. We could be coming down to that 618 around 1930. So good to have a plan for if it does go lower. And my plan is then just be doing very boring $1 daily DCAs. If this does go higher, though, we can see that I do have this fib extension up to around 29 bucks. But as you can see, that is a shorter term extension. We did break below, you know, this low that I have over here. So I'm just going to drag that over to this line. And then move this level over here to the lows from April 7th, just being approximate. We can take a step back. That would suggest a price of around $31 to $32. We'll actually do lower this, that, let's say, yeah, I'll just lower it, being a little bit conservative, lower that to around the 618. That would be suggesting a price target of around 31 bucks, 31.35. And my average for Avalanche is 23.68. So at 31 or 30, I would be in the green. So I'm going to note 30 as a trim level in the notebook. So that's, yeah, potentially something nice to do there. And then now the last one on the list, which has remained number 18, because I have not been adding to it, that is Loopring, ticker symbol LRC. And the reason I have not been adding to it is because I have to make the buys via Uphold. And got that thing popping up there. It's kind of annoying. There we go. Uphold. And yeah, so I have to do, it's a 99-cent fee. So I want to do at least $100 buy. And so I haven't been doing that. I'm not doing that with LRC. But yeah, we can look over at the market cap, though, of LRC, which is going to be at the very bottom of the list, number 408. I believe I mentioned that earlier. Oh, yep. No. Yeah, I did, because it's RLC. I want LRC. A little bit dyslexic there. Kind of funny that the two shittiest coins that I have are, you know, the same letters. But yeah, it's 312, not 408, which is RLC. LRC is 312. And so if I do copy and paste that market cap, which is around 118 million, I can just paste that over here and divide by 1 million, 118 million right there. And so the price for LRC, Loopring, US dollar on Coinbase. So the closing price from yesterday on the 30th was 8.5 cents. So I'm down 56% with that one. My average is about 19 cents. So that's kind of not so great. I'm a little bit worried this one could go to zero, in all honesty. And yeah, but we could see where it might be finding some support if there was an add level. Maybe next week I'd be interested in an add level after I had just gotten a paycheck without many bills due. But right now, I'm waiting for that week, and I want to make sure I take advantage of dips on RLC and Ondo. So I can get those down to a level where I can trim out at and then get more a little, maybe more aggressive with LRC at that point. But yeah, we do have this Fibonacci retracement here, shorter term. So I'm going to pull this back to the lows from over here. It looks like April 9th was the lows. The highs up here, corresponding with the high from May 5th. And so we have broken below that 786. So maybe this could be coming down to the consolidation lows, which would be right around here at 7.81 cents. So yeah, I think I might just leave it there at 8 cents as the dip buy level because I don't plan to add to this one, but maybe next week if it's down there, maybe I want to make that, I'll just leave it a white line. I was thinking to make it a green line, but yeah, good to be cautious with it. It could be going lower as it's just been fading lower. We do see over here, volume has picked up. So this actually looks more distributive relative to the volume over here because there's higher volume, but this is lower volume than what we were seeing over here. So maybe that is a good sign. But yeah, I mean, I think that this one's risky to add to, so I don't plan on adding to it. But yeah, 8 cents I would want to wait for, but then I think that could be like the rug being pulling out from under us. So yeah, but then a trim level, an exit level. This is a shorter term Fibonacci extension, but if I do pull this low back to the low from April 9th, do have this, or move this high up to the high from, let's see, May 5th, and then pull this back down to the low that we've currently seen, that level is going to be around 13.5 cents, which is below my average. So I would want to trim out at 19 cents. But since I have not added, I have the amount in that I want to risk. I don't really plan on trimming at 19 cents. I just plan on holding on, just chilling until the end of the year. By December, then maybe I'd accept some losses, or maybe I'd just say, forget about it. It's lost. So yeah, that's kind of the list. And with all of this data populated here, we can look at my percent P&L. And so we have seen some pullbacks here over the past week. Interesting. We do see, it looks like Ethereum Classic, and some of these have gotten a little bit buggy in how the data is plotted here. Like, yeah, what's going on there? Oh, that's because of the legend. I'm like, why is it looking all wonky? So yeah, maybe I'll just actually slide this over so we don't get the same issue next week, and we can see all of these, up here. So yeah, those are all of them. They've basically all pulled back a little bit other than Uniswap. That's basically the only one that went up over the past week. So maybe we do see a more notable correction over the past week. But yeah, I mean, generally I view this as dip buying opportunities. I'm excited about it. But with that being said, with those dip buying opportunities, I did want to kind of reconsider, just to keep this stuff to be a little bit more manageable, the dip buy levels for XRP and Cardano. So XRP in my notebook, I have 214. Sorry, XRP. That's up here. I do have XRP, the dip buy level, noted at 214. So that's where I'd want my $7 dip buy to be at. Which is where it's currently at. So I need to adjust that. So let's look at the XRP chart again. Going down to Coinbase, US dollar. And so that would be down to around $2 or 201. So let's round that up to 202. So I will say XRP down to 202. Okay. So that's the dip buy level there. And then now Cardano. Wait a second. Yep. Cardano's here. Okay. 72 cents is my average. 68 is where it was at. And I have noted that about 69 cents is the dip buy level, but I don't want to be too aggressive. I want to wait if it does pull back more. Otherwise, just chill. So I'm not doing a bunch of crazy, and maybe actually I want to do this with all of them, man. Because I feel like these are the ones that I should be more aggressive with. But yeah, 69 cents, the dip buy level would be around 64, so let's say 65. And so for Cardano, I want to do a $7 DCA or $7 dip buy there. And then that's just because, I'm so close to being at my average and want to get it down a little bit more aggressively. And these, yeah, I mean, I could just, maybe it goes up, maybe it goes down. Either way, they're going to be right around, or they're going to be below my average. I'm not too concerned about that. Avalanche is below my average, so yeah, I will do that, and that needs to be yellow, so I make sure that it does get implemented. And yeah, I mean, I'm going to have to think about it, but I probably will end up doing at least, $100 dip buy of Ondo, which is below 90 cents, and with RLC right around $1. Maybe I just want to keep an eye on that. If it does go below $1 RLC, then I would do a dip buy Ondo 84. Maybe I could do a second dip buy if it goes down. Well, no, it's closing price. Yeah, I mean 84. I think that's fine. Yeah, so that's kind of my overall plan for the next week. Yeah, I'll be spread pretty thin by the end of the week, especially if this $250 order gets filled on ETH, if it dips down to 2,350. And, speaking of which, might as well just look back over at Ethereum. It does look like maybe it's bouncing here a little bit. So, currently at 2,540. If we look over at Bitcoin, that is currently at around 104,655. Maybe we start to see a bounce, but maybe it does dip a little bit lower. So good to keep all of that in mind. But yeah, anyways, with all of that being considered, that is effectively, my visual representation of my thesis that I think ETH is not trash. ETH could be going up to $8,000 a coin by the end of the year. And with that, I do think that we will see an alt season. I do think that we will be seeing a blow off top, potentially with Bitcoin, or maybe it's just a higher high than we're currently seeing. Maybe that's around 114. Maybe it's higher. Maybe, like Eric Trump said, at the Bitcoin conference, which happened last week, I forgot to mention that, his thought was about 170, maybe 180 is the top by the end of the year. His initial response was he sees Bitcoin going to the moon, but he said, around 170. So I think that's, a pretty reasonable target. Other people are saying above 200,000. Some people are saying way above that. I think it's good to manage expectations. And so for me, my expectations are that if ETH gets to 8,000, that's a huge take profit level. Even if it gets to approaching that, I think that 6,000 could be a really nice level to take profits as well. So good to have a plan for that, good to manage risk. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more weekly Crypto Corner sat stackers like this one. Take care and have a great rest of your weekend. I'll see you guys later.